Hey everybody, it's Todd, Unbehagen, President and CEO of Unbehagen Advisors. I'm here with Conan Raitt, our VP of our tax department, and Joe Russo. He's a business law attorney and works well with us and our clients. So I just want to talk about trust fund taxes right now, briefly. And what are they? Well, they're probably the most serious kind of tax that can get you in the most kind of trouble, at least one of them, definitely. And most small business owners don't know about them or think about them that way. So what they are is basically your payroll taxes and sales taxes that you take from other people and then you're in trust to send it to the government. For example, payroll taxes, you take them from your employees and then you're responsible for sending it to the IRS. So you have the responsibility there. And by not sending it in, well, that's stealing. And the IRS federally, they take that very seriously. And sales tax is the same way. When your customers pay you sales tax, you're required to send it in trust to the Florida Department of Revenue or your Department of Revenue. And so by not doing so, the government takes that very seriously as well. So Conan, what are some examples or implications of not paying those taxes? And why do small business owners think sometimes, oh, it's okay, I can just kind of hold that back because I have a cash flow problem? And what are some ideas there with that?
Well, First, I think what the issue is that people lump all taxes together, and they assume that income taxes and sales tax and payroll taxes are all the same thing, and they're not. So it's important to understand what they are and what it all means. So from that standpoint, income taxes is basically your fee for living in America. It pays for the government, the president, and the military. And yes, you have to pay them, and it's a big deal, but trust fund taxes are a much bigger deal because, as you had pointed out, you're taking someone else's money and you're holding it in trust, whether it's the people that work for you or whether it's the state. And so those taxing agencies have much broader collection powers, and they can be really aggressive when it comes to that stuff. And, you know, the only time I've ever seen a client go to jail over taxes is sales tax and other trust fund taxes. So that's your exposure right there.
Yeah, I've seen one or two clients have the criminal investigators in coming after them because they didn't send in payroll taxes. And that's a very scary thing. It's not just, it's a felony. So, you know, if a business owner is coming up with a cash flow crunch, the last thing you want to do is hold back the payroll taxes you're supposed to be sending in or the sales tax, because, you know, that can end you up in prison and facing much worse things than a collections agent with the IRS. So.
Well, I think it's certainly a sign that you don't have a business that's in a good spot, because if you're having to use those trust fund taxes to float your daily operations, you really need to consider long and hard whether or not you really have a business that should keep going as an ongoing concern.
Right. So bottom line, don't if you pay your payroll and sales tax. I mean, pay all your taxes, but definitely you know, seek your accounting counsel and your legal counsel before you hold back any trust fund you know, taxes. Make sure there's maybe another plan, maybe a line of credit or something else you can tap into, work with your pricing or other things within your business, your costs, before you do that. So that's critical, to work with a team to make sure that you are in line and moving forward profitably, so you don't have to get to that as a small business owner in the first place. And we're going to talk to Joe here in a minute about some of the legal side of that as well. Thanks, Conan.
Great. Thanks.